We have a new episode of Global Ag Trade, Brick by Brick, again with Mike Zuzolo, and we're going to talk about the different aspects of the trade war and its impact on the ag world, and yet the grain purchases by China, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, welcome back. Before we jump into the grain trade, I have seen some news about Canada possibly joining the BRICS, which sounds a little odd to me. Like the BRICS also always was nations tied together, but they don't have a lot in common. They just have in common that they sort of challenge the U.S. Power in the world. And I've been following the trade developments of different countries in the last years. So I don't see, for instance, that Canada all of a sudden would have a lot of trade with Brazil having only one coast. And then how will Brazil ship a lot of goods to the, let's say, the west coast of Canada?
Yeah, no, I think you bring up a huge point at this point, Luis. Great to be back with you again and appreciate you doing this brick by brick global ag trade podcast and video analysis because I think it's just so timely. I think you're right in that by itself, Canada is probably not likely or would not be likely to join the BRICS as we understand them. I mean, attempts have been made, I think back 10, 15 years ago, there was talk about the same thing or a similar thing when some other trade issues cropped up. But I think this time is a little bit different in that one of my favorite European think tanks that I keep track with wrote not too long ago something that I wanted to share with the audience to kind of frame up what's going on in the big picture long term and combine that with what's been happening the last 6 months with the motives and the moves of the major trading partners in BRICS countries in light of the tariffs, because there is, I think, some common ground and some common denominators there. But this may help answer what you were just talking about as far as why would it be such that Canada would even contemplate joining this. And I'll give another answer here in a minute, but this is from a European think tank I like. As Putin's Russia faces Western sanctions due to its war in Ukraine, the Shanghai Cooperation Organization, that's something that's been around since 2001, and it was initially started by China and Russia. So this has been 24 years in the making that this has been going on, and it's gained more and more countries. But as the due to that Ukrainian situation, the Shanghai Cooperation Organization has also provided a diplomatic platform through summits and ministerial meetings that have allowed both Beijing and Moscow to form a from, front with global South countries. Now, I don't use global South, as you know, Luis. I use New East as the global South countries. It's because the hemispheric, I mean, India is in the South, but Russia and the former Soviet Union is clearly in the Northern hemisphere. So I like the New East and New West, even though Brazil is in the Southern hemisphere. But anyway, the New East and Global South are essentially the same thing when it comes to what you and I talk about. These Global South countries more aligned with their anti-Western narratives and authoritarian view. It goes on to say it's expanded its focus to global issues such as reconstructing Afghanistan and China's Belt and Road Initiative. So, this whole thing, especially since President Xi took over in China in 2012, and I think President Putin now has been in power 25 years at this point. We have something that is not going to go away. And I think what's happening, and what my answer would be straight through to the commodity markets, is BRICS countries are going to need to find new markets. They're not going to be able to trade with these new tariffs that the United States put in place with just the United States. They just won't have the number of goods, the value of goods, and the dollar amount coming in that they had previously. And they're going to have to find new markets. And that's probably going to push them to work more together. And so, an anomaly country like Canada may not seem like it would fit well with the BRICS. But if you're talking about Canada and Russia trading more together, or Canada and China trading more together as BRIC countries, that makes total sense. Look at what's going on in the rapeseed canola market right now, with China not taking, and stopping the imports of oil seeds from Canada again. And look what it's done to the soybean oil complex and the vegetable oil complex here in the short term. And so I really do see a linkage between what's happening in President Trump's new term. We have to remember, and we've talked about this many times before, President Trump and his administration sees their trade policy as their economic policy to bring manufacturing back to the United States. That's a long-term goal. That's not a short-term goal. And they also see their trade policy as a foreign policy. Instead of armed military conflict, President Trump uses economic conflict. Again, we saw that just this week with Russia, to get Russia to the bargaining table for peace potential in Ukraine. He went towards Brazil and India and their oil and diesel imports, because that would hurt Russia and make India and make Brazil go to Russia and say, we can't have this, we can't have this. But in the background, the BRICS countries, the new East countries, are still negotiating a way to not have to rely upon the US as much in the big picture.
Now we have seen a lot of progress with the events that you just mentioned toward the end of war. Do you see the same thing happening even if the war comes to an end in the next few months?
I think this is how I would see it. And this is in the context that it should be known that the Indians bring in about a million 4 barrels a day of Russian crude oil. They ship out 1 million barrels a day of refined product. About over 30% of their oil imports are all Russia. For Brazil, they did about $12.5 billion worth of trade with Russia last year. Five and a half of that was just in diesel. They're the number two diesel importer from Russia in the world, only behind Turkey, half a world away. And they're still bringing the second largest amount of diesel to, to fuel their farms and to be able to make their grain and their soy cheaper, because they were getting big discounts initially. I've heard it's up to 30% lower than market values just to bring in that kind of quantity into Brazil. And so that's the lens that I look at. And I think that's the lens that President Trump looks at when you ask a question like you did. And so the short answer is if there is peace in Ukraine and Russia, and a peace deal is signed and it holds, then we don't have to do any more sanctions on India. We don't have to do any more sanctions on Brazil. We don't have to propose increased sanctions on China. President Trump put that on the sidelines this past weekend. And so, as a result of that, our agriculture trade could get back and humming again. And the market collectively, the funds and the speculative investment money as a whole and collectively, would, I think, worry less about the US losing demand, and it would bring the prices back to a better price level in the coming months. So that's kind of how I see it. If we don't get peace, the one thing that I'm not sure about, because we are really truly living history right now with this new international order and breaking apart globalization from the last 70 years, what happens if we don't get peace and President Trump hits Russia hard with sanctions, hits India, Brazil, and China with sanctions, and crude oil goes sharply higher as a result of that? And how does that react in the dollar market? And then how does the agriculture market react to that as well?
Well,
That's
but
not
at the
this.
same time, I see that there is a double-edged sword in there because the main focus of the sanctions are both China and Russia, but still they are not because there was a truce with China with this pause that Trump has extended, and yet Putin has brought to the table, while Brazil and India they are outside and hit hard with sanctions. I just would think that because China and Russia had a lot have a lot more leverage than Brazil and India.
Yeah, I mean, I would say you're right, but I would also say that my hope was that we would maybe not have to rely upon China this time around, because the phase one trade deal in the first Trump administration, it was kind of a letdown in terms of volume sold. And especially as President Trump's term ended and then President Biden's term came on, I was hoping that we would be able to work more with India, because India is the future. If you ask many commodity people about both the youth and the amount of population and the demographic of the population and the upcoming income of the population, India is China 25, 30 years ago in many people's minds. It's that way in my mind. So I would have loved to have had India and a trade deal for U.S. agricultural exports, and that would have taken the pressure off of us having to have China. It was just today, the day we're taping, that the American Soybean Association wrote a letter to President Trump asking him to get soybean exports back up and running, and especially and specifically to China. I've seen more articles of Brazilian farmers going bankrupt and loan defaults. I think in some areas at a historic high. No matter where you're farming, this is not good in terms of what we're going through right now in the row crops and the agriculture commodities. And so I think that's the common ground that we can find is there's plenty of demand out there for everybody. We just need to get these pieces of the puzzle aligned a little bit better.
And you just mentioned my next point is where China is going to get their soybeans and their corn in the next months. They have been avoiding U.S. Source for quite a bit. So, do you think that they are going to get back soon? And if the war does not end, if something bigger can happen, that China can react with the U.S. bonds
Yeah,
as they did previously?
yeah, great question, because it's not certain, it's not known right now whether Brazil and Argentina have the capability of getting all the supply needed that would offset what the United States has been providing. But that goes back to the last USDA report. I've always been of the opinion that our exports, total exports for the marketing year 25-26, was not going to be much better than 1.7 billion bushels. USDA started out much higher than that, but in this last report, they too came down to 1.7 billion. So they've been taking out the exports that we're losing to China in real time. Maybe we could lose another 150 to 200 million bushels. It's really going to be up to the domestic oil market and that biofuel policy that EPA has proposed to justify price levels at this level in soybeans or higher, with domestic demand offsetting export demand or vice versa. And so both my eyes are on the EPA and the domestic biofuel demand in this next marketing year to see if we really can get away from the export market and keep bean prices high enough that U.S. producers have the incentive to plant next year.
Now I have had a significant repercussion of a crop tour that I have been in Illinois and Iowa, and I have seen a significant drop in yields in Illinois, especially in central Illinois, not so much in Iowa. And I have heard from several other parts of the U.S., such as Nebraska, that the same problems with pollination is happening, even though if the crop is looked at from the road, it looks pretty good. But so, how do you see the market in case there isn't a full crop as the USDA is expecting?
Yeah, I think that's great information. Thank you for sharing that. I had too have heard. I talked to a Southern Illinois producer who was doing some yield checks the middle of this week, And, this is a producer that has quite a bit of livestock manure that he can put on his fields. And so even though he's in South Central Illinois, he can still get into the 220s, 230s, 240s for yields in his fields. He has told me at this point that he'll be lucky, in his opinion, to get 150 bushels. And so I think state yields in Illinois, state yields in Indiana, state yields in Ohio, state yields in Missouri, and state yields in Nebraska will all come down from what USDA gave us in the August report. I think maybe the crop was there at the end of July when that satellite data was utilized, but I think the crop is being trimmed as we speak. And we just got brand new weather forecasts for the rest of August. The forecast is suggesting cooler, but much drier, a lot drier than normal for the month of August. I've talked to several producers about that, and that even with the cooler weather, they would probably lose beans in their pods. They'd probably lose test weight and girth in their corn. So I see this year very similarly still as like last year. We had a very similar price action, very similar report. Beans made a low on the report week last year. 2 weeks after that, the corn and the wheat made their low around the 26th of August of that week. And then we went higher into the early harvest time period. Unless something happens in the outside markets, I could see a similar type situation develop. Having said that, I've made it real clear to clients and subscribers this week, the week after the report, we need a higher close this week because we have the Federal Reserve talking, we have the Pro Farmer Tour, and we have that weather situation developing. And if those three things can't come together and give us a second close, a second week higher, I'd be disappointed.
Yeah, so but how do you see the overall market if there isn't a record crop in the US?
I see it very similar as last year because we do have the demand. One of the things that I was looking at before we went on air, and I was going to ask you about too, is the logistics. It sounds like Brazil's ramping up on their corn exports, getting more out the door. But it still sounds like they may have some issues with their logistics of getting enough out the door here in the short term, just because farmers aren't selling. And why aren't farmers selling? Is it because the crop's not there, or the price is too cheap? But to answer your question, Brazilian soybeans right now look like 445 a ton, US 407. Brazil corn is around 213 a ton. US is around 185, 190. That weak dollar, Luis, is really working to benefit and to take away the sting of these tariffs. And our demand has remained very stout here in the United States, even with those tariffs because of that.
Okay, so what's your last comment in terms of market advice?
I was going to ask again, what are you thinking in terms of Brazil when it comes to the farmer selling down there? Do you see them picking it up in a couple months? When do they have a seasonal pattern, and why aren't they selling right now?
Well, there is this logistical problem, also because of the imports of fertilizer. So
Mm.
there isn't much room to export all of this volume that has been going on with China.
Is the farm economy as bad as I'm reading as far as the losses that
Yeah,
are?
yes, because mostly because of the floods of last year that the government has not provided the support for the southern farmers that suffered with those floods, and yet the higher interest rates and the end of some government programs that helped farmers to invest in technology.
I see. Well, to answer your question, having that knowledge behind me is I probably stay with the game plan. Is if we can get another week higher here and get the beans back up towards that $11 level, 1075 resistance, work on getting off the combine sales done in beans and in corn, kind of alleviate the pressure of having too many bushels to sell when the combines are rolling. So good basis in some areas in the Eastern Corn Belt right now. A couple clients have told me about an Indiana basis level that's posted 25 over, but they're giving 40, 45, even 50 over for corn right now. And so that's another big thing. And the other thing I would mention is Western Corn Belt, Bean Belt basis is upwards of 70, 80 under, 80 cents below the November futures. if we trim this crop, I've got to think that that basis is not going to be that bad in 30 or 60 days. So might be an opportunity, one-on-one conversations necessary, might be an opportunity to do some hedge to arrives, leave the basis open, and then see if it can't come up here in the next 30 days on dry weather.
All right. Thank you very much, Mike, as always.